Good morning, it's Thursday 28th of April. I'm Tom Elliott and this is my market report. Well, the Australian stock market has been a bit schizophrenic, if you're allowed to say that, the past couple of days. Yesterday it was down quite strongly, even though, I should say weakly in a sense, but it was down, even though the night before the US markets were up. The reason for the weakness in our share market on Wednesday was that at 11:30 a.m. March quarter inflation data came out, and it was a bit worse than people had been expecting. Market expectations was that inflation would be 1.2% higher for the quarter. Instead, it was 1.6% higher, and for the entire year, inflation appears to be well above 3%. 3.3% was the number recorded yesterday. As we know, the Reserve Bank's preferred range for annual inflation is 2 to 3%. If it stays above 3% for any length of time, the Reserve Bank's trigger finger, I should say, in this case on interest rates, starts getting itchy, and that means rates could rise. Now, the impact of this was also felt in the foreign exchange markets. The A dollar has leapt to a new record high. As of this morning, Thursday, it's currently 1.091 US dollars. So that is a record high since the dollar was floated in the early 1980s. And overnight, the US Federal Reserve left American rates on hold. So Australian rates look like they could go up. US rates appear to be staying put. As a result, the A dollar just keeps going up and up and up. And I must say, I've been very surprised about how strong it's been. I still think there'll be a correction in the second half of the year, but thus far I've been a bit wrong on this one. This morning, the share market is recovering. A lot of people getting excited about the AFL broadcast rights. Shares in West Australian newspapers, which as of a couple of weeks ago now owns the Seven Network, are a little stronger, although they have been quite weak in recent weeks. Of course, Channel 7 is rumoured to be the winner of the AFL broadcast rights for the next 5 years. Although winner is a relative term here, because they're only the winner because they're prepared to pay the most money, and it's hard to see whether they'll actually make much profit from spending over $1 billion on TV rights. They will, of course, share these rights with Foxtel. You can't buy shares in Foxtel, although Consolidated Media, which owns 25% of it, was also stronger. And Telstra was also up because Telstra is the front runner to win the online rights for all AFL matches for the next 5 years. In other sectors, Origin Energy has been very strong since it came out of a trading halt yesterday. Over Easter, it announced a massive gas deal with Sinopec, the big Chinese gas customer, and that should underpin its Queensland coal seam gas project for the next couple of decades at least. Origin shares up around 5%. Equinox mining shares were up 7%. It was under takeover by China's Min Metals, run by ex-WMC head Andrew Mitchell. Well, Barrick Gold of the US came in. It's also listed in Canada, and they trumped Min Metals' bid. Min Metals said it won't be back with a higher bid. The new bid is worth about $7.93, although it is denominated in Canadian dollars. So if the A dollar keeps rising against the Canadian dollar, the bid value will go down. As a result, Equinox shares up around 7% at $7.85. Speaking of China, the Prime Minister on her recent trip around the Asian region has proposed a free trade pact with China. Now, we don't know whether or not this will actually proceed to a full agreement, such as we have with Thailand and a few other countries. New Zealand, of course, is another one. But a free trade agreement with China would be a massively important step in Australia's economic development. It would indicate to Chinese companies that we were willing to sell assets to them. And that's something you do have to do in a free trade agreement. It's not just trading goods and services. Assets like farmland, factories, companies have to be pretty open to the other country as well. Still, I think it would be good for the Australian economy, and I'm glad that the Prime Minister is pushing for this. And just on the other side of the ledger, house prices in the March quarter, this came out just a few days before the inflation data. Well, inflation might be going up, but house prices have been decidedly soft since the start of the year. And of course, as we know, if interest rates do climb further, this will make life very difficult, especially for first home buyers.